Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Jobs Report Friday market webcast. All right, so we got jobs in 50 minutes, about 7:40 Eastern time right now. So I'll make this quick so we can get it out and everybody can take a look at it before. Look, I haven't said this in a while, but I'll go ahead and admonish all of you out there within the reach of my voice. Don't game jobs. Just don't. Don't try to guess what the reaction is going to be to jobs, okay? I don't care how many times you've read Barron's this week. I don't care that that you have Market Watch up on your 12th screen there on your desk. I don't even care if you stayed in a Holiday Inn Express last night. It doesn't really matter. Let the number happen, let the reaction happen, and then what we do is there's going to be a reaction range up and down. You're either going to build lower highs or higher lows off of that, then you're either going to break out or break down. And there will be plenty of time and plenty of handles associated with that move without you flipping a coin at 8:29 and 45 seconds because the reaction to the jobs report has to be X. It really doesn't, especially not while we are hanging out in this box. So, we've been doing this for so long, I have to draw now. Like, here we are. Here we are. We are in box land. When it goes on that long, I can't help it. So, that little area, that range, to the upside or the downside, whoever definitively comes out of that range is going to get the first quarter of 2023. And it's still pretty much, up in the air. You can see that you just continue to struggle with the 9-day. The 9-day has been involved now for about 8 sessions in a row. You see the 20-day, the middle band coming down to meet the 50. Every time you start printing anything with first of all, it was anything with 37 on it. Bears didn't like that. They weren't comfortable. Then it's pretty much anything below 38.25. They get very squeamish with that. Overnight low last night's 38.24. So, and you're only talking about, in relative terms, the Globex range last night was really tight. It was only 25 handles. Now, rewind, back to times when, the E-mini didn't have its hair on fire every day of its life. 25 is like, hey, that's a solid day. We got a lot of work done there. Because, the range wasn't, 8, 12, now we're used to ranges being, 30, 40, 50, 60 handles. And if they're not, it's like, what's going on with the market? Well, it's not a complete fire drill today. That's what's going on. Hourly chart. I mean, this is just a zoomed in version of the same damn box. I don't think there's anything particularly exciting going on with the Bollinger Bands. You got the weekly pivot here in the 9-day. So let's play the what if game regarding jobs. The number one thing the bears need to do with regard to jobs is any upside reaction, ideally, is capped by the hourly midband. Then you see a break of yesterday's low, a break of the weekly low, which is down here at 14.5, and trying to get back into where we were middle of the week last week. And, if you get a big negative jobs reaction, do you think you have enough staying power to maybe close with something with a 37 on it? Maybe, Look, I have no problem with people getting bared up in bear markets or getting bulled up in bull markets. What I do have a problem with is looking at a market that is consolidating, that is two-sided, where both sides have issues at the edges and saying to people, you absolutely have to be X or you absolutely have to be Y. That's not what we're doing right now. I think that will be the step after we get out of this box, and that's fine if you want to get directional. But, I made money long and made money short this week. We had a really good subscriber Q&A yesterday for about an hour. We got into a lot of really good stuff. And one of the things we talked about is, look, just follow your plan. These are the rules. Follow the rules. Respect your risk. Take your profits where you find them. Don't get dug in. Don't get ideological. Yes, we are below the 20-day. We are in sell rallies mode, but that doesn't mean there won't be rallies. We are not Wile E. Coyote off a cliff, if you haven't noticed yet. If you need a refresher, let me take you all the way back to where we were 2 minutes ago. That's not off a cliff. That's not, oh my God, you better be totally short all the time because what's going to happen to you? That is reading into a chart what you want it to do versus what it's actually doing. Right now, it's actually doing nothing. And I'll say again, once it converts this area, there will be plenty of time and plenty of handles on the other side to do whatever it is you want to do directionally. But by trying to game that breakout, don't think you don't have people trapped from here short. And you certainly have people trapped long from here, from these upper areas. You got a lot of trapped people, but nobody's really willing to make any big decisions right now. It's the first week of the year. It's usually tight. This is it. Right now, it's a two-sided tape. And that's illustrated pretty well in this hourly chart, and you got to treat it as such. All right. So, where are the numbers right now? Hourly mid 38.36. Hourly mid to enunciate. VWAP 38.36. So they're locked up. 36 will be a big deal off jobs. Okay? Then you got the 9-day up there, 49 and change. Weekly pivots up there, 58. Look, if the bulls get a positive reaction to jobs, you really got to close above 58. You're not going to do this one. I'm sorry. I appreciate, thanks for coming out. But, I don't think we're printing anything with 39s on it. It will take a hell of a lot more than the jobs report to produce that. Proprietary moving average is sitting at 30. Overnight lows at 24. The bears need to take out the overnight low on the jobs reaction and then never give it back up if they want to break out of the box and get directional today. All right. That's all I got. Everybody have a fantastic day. Safe, healthy. Take care. Trade them well. Have a good weekend. I'll be back Monday with another webcast. Be good.